Was this topping of the 7 level inevitable at this point? I mean, this dollar has been slightly stronger in the last couple of sessions, but it seems to be that that policy divergence story is not going anywhere as well.
Yeah, very much so there. Good morning, guys. Very much so. I mean, there really is two things that are driving this move at the moment. I mean, firstly, there's concerns over the health of the Chinese economy, of course, particularly with its COVID-0 stance and issues in the property market. I mean, we should get a better reading on the Chinese economy with a data dump today, which has indications on industrial production and retail sales, among others. And as you mentioned, the other side of this is the US dollar, which is being an absolute bulldozer across emerging and developed markets. I mean, so this weakness really isn't contained just to China. I mean, we've seen the Japanese yen, it's at heading towards 145. The Korean won is being smashed. The Canadian dollar hit a fresh 2-year low overnight. The Aussie dollar is heading towards another fresh 2-year low at the moment, if it hasn't hit it already, as we've been talking. So this is all because essentially rate expectations in the US are going up, and there's bets that the Fed is going to maintain its hawkish stance, hike it by 75 basis points next week, and potentially move its dot plots. So yeah, it's that all spells bad news for currencies globally, because the US dollar is just getting stronger. So it's hitting emerging markets and developed markets alike here.
Matt, you mentioned some of those trading pairs, and it's really interesting. If you take a look at the yuan versus the won and the yen, we're actually looking at a 13-year and a 29-year high against those currencies. These are major trading partners as well as competitors. So does that give us an indication that the PBOC may actually have more appetite for weakness?
Yeah, yes, indeed. I mean, and that's the sort of thing that we're seeing from strategists at the moment as well. I mean, today, as you guys mentioned earlier, there's a lot of eyes that are going to be on the fixing. The PBOC will probably fix it again stronger than expected. Wells Fargo expecting it to be a lot stronger than expected today. And this is all basically just to smooth out the yuan slide. So as you mentioned, on a trade-weighted basis, the yuan is holding up pretty well. So, that halt in trying to smooth out the slide in the yuan is sort of something that we've seen with other central banks, particularly in Asia at the moment as well. The Korean central bank, for example, is a perfect example of this. They've just been using FX reserves, and they've been coming out jawboning it that, yes, they're worried about the one-way movement in it, but again, they're just trying to smooth out the slide in the yuan, so there really isn't a capital flight that goes on there.